There's been much talk about the launch of the new BRICS gold and commodity-backed currency and its effect on the US dollar as the world's reserve currency. Whether the BRICS Plus nations announce this currency this year or not, the intent to exit the highly inflated, faith-based fiat dollar is clear. Saudi Arabia, among many other nations, have already signaled their intent to join the BRICS alliance. This member alone will challenge the USD's 50-year record as the petrodollar. We will hear from experts such as Luke Gromen. Macroeconomist Luke Gromen is founder of Forest for the Trees LLC. Jim Rickards is an American lawyer, economist, investment banker, speaker, media commentator, and New York Times best-selling author on matters of finance, geopolitics, and precious metals. On the subject of strategy, I will leave you with one of my favorite quotes from the Hall of Fame and professional hockey player Wayne Gretzky. "I skate to where the puck is going to be, not to where it was."
I think you can look back to the day before these sanctions were rolled out, and you can see Jamie Dimon on TV on Bloomberg saying, "Don't weaponize SWIFT, it's a threat to the dollar system." You can see Citigroup advising the White House, "Don't weaponize SWIFT or the dollar system, it's a threat to the dollar system." I think we are going to see the preeminence of not just gold, but of physical gold. I think you're going to see a market to gold is going to gain a significant amount of share in global reserves for exactly the reason you say, and not just physical gold, but it's no longer going to be, we trust to hold it in London, in the LBMA system. We want it, give it back. And yes, once again, you'll probably see people hold working capital levels of gold in the LBMA system, in Hong Kong, in Singapore, in these global financial centers. But the rest of it is going to start coming back to borders because the West does have a grip on the financial system plumbing. If you invest along the Belt and Road and across Eurasia, U.S. Navy can't touch it. So there's probably does start to factor into not just I think a lot more gold, a lot more physical gold held within borders. Russia's looking at collapse if they don't change the dollar system, if they don't change the currency system, if they don't start getting paid or reserving real assets relative to Western sovereign debt for their energy, right? Because their energy, they're going to run out of energy at some point, and then they're going to be left with a pile of IOUs. If Russia's oil peaks and starts declining, then the IOUs, the Western IOUs that Russia holds, are going to be a lot less valuable in oil terms. If you start taking Russian oil out of the system, the treasury bonds collapse against oil. Treasury bonds collapse against gas, against palladium, against cobalt, etc.
One of the big props under the U.S. dollar has been what's called the petrodollar deal. This is something that came out in the mid-1970s, again, a time when the dollar was under attack. And the United States, through Henry Kissinger, said to the Saudi Arabians, "Look, we will guarantee your security, the continuation of the rule of the House of Saud and the national security of Saudi Arabia," because they were weak militarily and they had I like to say the Middle East is a bad neighborhood. They had a lot of enemies. In exchange, we want you to price oil in dollars. There's no reason why oil has to be priced in dollars. It could be priced in today, euros, back then, Deutschmarks, Swiss francs, Japanese yen, gold. You can price oil a lot of different ways. But they agreed to price it in dollars in exchange for our guarantee of their continued rule and their national security. That deal worked beautifully for 30 years, through the 80s, the 90s, the early 2000s. It really did put a floor under the dollar. But by the way, Saudi sells most of the oil these days to China, not the United States. So how long will it be before Saudi Arabia says, "Okay, China, we'll take your currency in exchange for oil," or maybe we'll take gold, or China buys gold and gives us gold and we'll send you the oil. But one way or another, the dollar is out of the picture. Again, that hasn't happened yet, but that process is already underway. So this is one of many threats to the reserve currency status of the dollar. And when that status goes away, as I described, you could be back to a world of, borderline hyperinflation in the U.S.
How do you hedge against an ever-depreciating fiat dollar? Own the opposite. Sound money. Sound money is built with assets that have scarcity, a long track record of trust and value, and cannot be printed by central banks. Gold's track record is clear, and so is the US dollar's. Fiat currencies have come and gone, but all the while, gold and precious metals have stood the test of time. Get started protecting your retirement savings today. See the links in the video description to get access to the free gold investment guides from the best gold IRA and gold investment companies that we have personally researched and vetted. Thank you for watching.